Hey everybody, welcome back to the Thinking Crypto channel. I hope you're doing well. I've got a lot of news to cover with you guys today. We're going to talk about the SEC, Gary Gensler, a Bitcoin ETF, and crypto regulations as it relates to the Howey tests and securities. In addition, Gary Gensler spoke at a virtual conference, which Ripple CEO Brad Garlinghouse is going to speak at tomorrow. Interesting dichotomy here, right? We're also going to talk about the SEC Ripple lawsuit where Brad Garlinghouse's legal team won some insights into getting information from Binance about XRP sales overseas. We're going to talk about all that and Gary Gensler being Jay Clayton 2.0. In addition, we have the infrastructure bill, which had a ton of crypto things that were snuck in there to tax crypto, to improperly regulate crypto. Well, it looks like they're backtracking and that's going to be removed. So I want to share that update with you. We also have news that Wells Fargo, another major bank, is offering Bitcoin trading to their wealthy clients. Lots to go through. We're going to break it all down. Before we do, please go ahead and hit the thumbs up button, leave a comment below, and hit the subscribe button if you're new here. It helps support the channel and it doesn't cost you anything. Guys, this video is brought to you by OKCoin Crypto Exchange, where you can buy, sell, and trade your favorite cryptocurrencies at low fees. You can also stake your cryptocurrencies and keep 100% of the reward, so you don't have to pay any fees like you do with other exchanges. In addition, OKCoin will be the first exchange to list Miami Coin, a city coin for the city of Miami, of course. Big announcement for the tokenization of the future. And what we've been talking about, tokenization of different assets. So I'll put a link in the description for you guys to go learn more about that. But OKCoin will be the first to list it, and that's coming soon. And here is the big news. So two things. Gary Gensler was on the Aspen Security Forum virtual conference today, where he, of course, talked about crypto and regulation and Bitcoin ETF and so on and so forth. What's interesting is that Ripple CEO Brad Garlinghouse is going to be speaking at the same conference tomorrow. Now, Gary had a lot to say, and I said it at the beginning of the video that he seems to be Jay Clayton 2.0. So it goes back to my theory that Congress has to step in because he's looking to continue the same BS how we test against crypto, use it against cryptocurrencies, which is really silly. They need to build a new Howey test. And look, Ripple's lawyers have said it should be called the Ripple test because Ripple and the SEC is on trial right now, of course, over XRP. So a lot of stuff that Gary had to say, and here you can see both of them are on the website of the Aspen Security website where, like I said, Brad Garlinghouse is going tomorrow. Here's Gary. And here is Brad. So interesting. So Gary Gensler said it's truly a worldwide market, speaking of Bitcoin and crypto. And he said a Bitcoin ETF is possible if it fits, complies, and with the SEC's strict rules for mutual funds. A bit more on that here. One thing Gensler made clear, this is according to Michael Arrington, he thinks all of crypto is under his control, and he's eager to expand the power of the SEC. He said the law is clear based on 75 enforcement actions, but seems to be walking back clarity on ETH. At least all I see is more muddy water. Absolutely. I think he's Jay Clayton 2.0. I think the infrastructure of the SEC, no one can come in and change it. It's this political setup that even he can't go against the grain there. And he'll continue the same. And that's why I think Congress has to step in to fix this with new regulations and laws that puts crypto less under the control of the SEC, if that makes sense. Now, he also said the following, and I'm sharing these different tweets because people were watching the live conference and tweeting out what he said. He thinks, Gary Gensler thinks there's a lot of clarity embedded in the Howey test and others. It's facts and circumstances based. Come in and discuss it with us. Sure, whatever, man. This is BS. And I think part of it, he's coming out and saying these things because of the Ripple lawsuit, right? That lawsuit has so many eyes on it, and the SEC is taking so much crap, right? A lot of media coverage, they've been exposed. the conflicts of interest with William Hinman and Jay Clayton. I mean, just look at Jay Clayton. This man did not approve a Bitcoin ETF throughout his tenure. He leaves, goes to an investment firm that is investing in Bitcoin, and files with them a Bitcoin ETF. You can't make this stuff up. It is a joke. So I think there's a lot of cleanup that he was trying to do here, save some face. You know, he went out there and he said a lot of things. And look, Gary's a smart guy. He knows crypto. He's taught it at MIT. So I think there's a bit of trying to put out a different narrative here for the Ripple lawsuit. But I do think the SEC is not in a good position. Most likely they will lose and Ripple's going to win based on what we're seeing so far. And he also did an interview with Bloomberg. So yesterday he did an interview with Bloomberg and he shared similar comments, right? And he said the following: while I'm neutral on the technology, even intrigued, I spent 3 years teaching it, leaning into it. I'm not neutral about investor protection, Gensler said. Yeah, but the SEC crashed the price of XRP with their lawsuit. And it's clearly not a security at this point. Sure, did Ripple maybe back in 2013 to 2015, was it then a security? Sure. And I think the SEC is trying to do something else here. Once again, they're trying to grab as much control. And I think that's why this escalated. Now, here's what Caitlin Long said regarding Gary's comments about a Bitcoin ETF. ETF would be based exclusively on Bitcoin futures rather than underlying Bitcoin itself, and on cash settled futures specifically, not Bitcoin settled. So not physically settled, which is interesting. This likely means the SEC still isn't comfortable with the market manipulation issues in the Bitcoin trading markets, maybe never will be. I don't think maybe never will be. I think they will eventually, because look at all the big banks that are getting in. BNY Mellon, I'm going to be interviewing the CEO of Luca, which is providing accurate price data and aggregation to who? S&P Dow Jones. We saw NASDAQ launch their own crypto indices as well. So I don't think forever, but in the short term, they may do ETF that is tied to, sounds like, Bitcoin futures, but we shall see. I do think there's a strong chance because you have the big influencers in the market, and that is Goldman Sachs, Morgan Stanley, JP Morgan, Cathie Woods, ARK Invest. Big players are here, right? And we saw that BNY Mellon partnered with Grayscale. So I think more than one Bitcoin ETF will be approved this year. I think that's not really a concern of mine. More of they're going to use the same stupid Howey test. And don't get me wrong, I shouldn't say stupid Howey test, but rather the old Howey test, which is made for stocks and so forth. And they're going to use it for crypto, which is nonsense. I mean, come on, right? But I think, once again, Gary went out here to save some face, put out a narrative to counteract what Hester Peirce and Elad Roisman put out about all the negative press they've been getting about this Ripple lawsuit from even fellow commissioners, right? And obviously previous chairmen and commissioners. So this is a bit of a mess. So here's the Bloomberg interview that Gary did. And once again, Jay Clayton 2.0. Now, the Ripple SEC lawsuit. Brad Garlinghouse's lawyers filed requests for Binance documents in international challenge to SEC lawsuit. The offers and sales that the SEC challenges did not occur in this country and are not subject to the law that the SEC has invoked in this case, said the legal team. So, a couple of things. Brad Garlinghouse and Chris Larsen sold XRP. I think that's common knowledge. I also know Vitalik, the founder of Ethereum, has sold Ethereum. So has Charlie Lee, the founder of Litecoin. So it's not a problem that they sell. It's just a matter of context. Put it into context. Did they sell everything? Was it they closed shop and disappeared? No, right? And if we were in the same position and we had the tokens, of course we would sell some. So they're trying to go after Brad and Chris, and we've talked about this. It's more of to put pressure on them to do what the SEC wants, but this is not looking good for the SEC because the sales didn't happen in the United States. So according to court documents filed in the Southern District of New York on Monday, Garlinghouse's legal team has requested documents relevant to the case and unobtainable through other means from Binance Holdings Limited, the Cayman Islands-based subsidiary of the major cryptocurrency exchange. The filing cited U.S. laws concerning the Department of State and Hague Convention and asked the court to issue a letter of request for the Central Authority of the Cayman Island to compel evidence from Binance. Well, we have an update here, and James Filan, he tweeted the following: Brad Garlinghouse's motion to obtain international discovery has been granted. So we continue to see Ripple and even Brad and Chris are making progress. They're getting some of these small wins. Obviously, the ultimate goal is to get this stupid lawsuit thrown out, and XRP shown that it's not a security. So that's kind of what's happening right now. Once again, Gensler on the attack here, and looking like he's going to be Jay Clayton 2.0. Now, moving ahead, remember the infrastructure bill we talked about, where these sneaky politicians tried to throw in some sneaky crypto regulations and heavy tax and overreach. Well, U.S. Senator says crypto tax in the infrastructure bill is unworkable. You don't say. Plans to offer amendment to fix. That's good news, right? And that's why, part of why I created this channel too, is that I don't consider myself a journalist or anything by any means, right? Or anything, but it's to put the information out there so you guys are educated, so that we put pressure on these politicians to do the right thing. They're supposed to serve our interests, right? Many times they don't. They serve the interests of those who are their highest bidders, who are donating to their campaigns. So this is why we have the internet, we have decentralization of media. We have to tweet, we have to put out videos, we got to keep them accountable, we got to tweet at them, call their offices up, right? So I hope you guys understand this, and it's great to see that they're backing up here. So several US lawmakers have spoken up against the crypto tax provision in the $1 trillion infrastructure bill. While the bill has been revised from last week's version, the text is still unworkable. According to Senator Pat Toomey, I plan to offer an amendment to fix it. Other lawmakers, including Senator Ron Wyden, Representative Warren Davidson, obviously great crypto advocate there, and Representative Ted Budd have also voiced concerns. So this is what we got to do. We got to speak up. We got to go after it. And it looks like they're going to backtrack and fix this, because this was not good for the crypto market, what they were trying to, once again, sneak into this infrastructure bill. This is not a crypto bill. This is an infrastructure bill, and they're trying to sneak this crypto stuff in it. Slimy politician move there, right? And I'm not saying all politicians are slimy. Don't get me wrong. Look, I'll be interviewing Congressman Tom Emmer soon, right? And Warren Davidson's a great gentleman as well. So one person that I do feel is slimy. So let me give you context there. Elizabeth Warren. I think she's a political hack. She's not educated about it. Crypto, yes, she's going out there firing guns, and I would love to see where she gets her campaign donations, because I think that will tell us what's going on. Well, she tweeted in conjunction or in response to Gary Gensler's Bloomberg piece here, saying, cryptocurrency is the Wild West of our financial system and desperately needs rules of the road to protect investors and our economy. I'm glad SEC Chair Gary Gensler agrees, and I'm going to keep pushing our regulators to act. And here, Mike Novogratz, billionaire Mike Novogratz, founder of Galaxy Digital, he said the following: crypto is the future of our financial system, and our citizens deserve officials that do their homework to understand this new technology. Absolutely agree with him. This is, once again, in response to Elizabeth Warren. Most of our leaders haven't done that yet. Yes, Elizabeth Warren is one of them. We also need regulators and politicians who understand that new ideas need room to grow. Absolutely. Look, the United States did it with the internet. They are failing to do it now with crypto and blockchain. And this is why, once again, we got to keep putting the pressure. Get on Twitter, tweet at them, thumbs up this video, share it, right? Just get the information out. Look, it doesn't have to be my video. It could be somebody else's, because we all need to come together, regardless of what tokens we hold or how we feel about Bitcoin or XRP or whatever. We are under attack from these clowns, these political hacks who are not educated about the matter. But as I've stated before, guys, when the whales, the big institutions who pay the campaign donations, who give the campaign donations are here, I think ultimately things will work out in that direction. It might take longer than expected, though. Here's another example of mass capitulation or massive capitulation. Wells Fargo now offers Bitcoin and crypto exposure to wealthy clients. The dominoes are falling, game theories playing out. It started with Paul Tudor Jones last year, then Fidelity, TD Ameritrade, Chase, Goldman Sachs, Morgan Stanley, Citi, Wells Fargo, Bank of America. Everybody is here. This is huge. So Business Insider reports that Wells Fargo clients can now get Bitcoin and crypto exposure through the bank. And in May, it was reported that the investment research division of Wells Fargo Wealth and Investment Management was going to implement an actively managed Bitcoin and crypto strategy to its qualified investors. They're all going to capitulate. They're all going to offer crypto trading. Don't be surprised that you get a call from your local bank, whoever you use, right? And they say, hey, Mr. whatever your name, or Mrs. whoever, whatever your name is, would you like to diversify and blah, 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 invest in crypto? We'll custody it for you. Don't be surprised if you start getting that call, especially when a Bitcoin ETF is approved. You're going to see it from retirement accounts. Everybody's going to jump in because it'll be more secure and less of a risk for these companies to do it. Now, I keep telling you guys, Bitcoin mining boom in the United States. I hope you guys are seeing what's happening. Bitcoin mining firm Hive orders 4,000 machines from Canaan. Publicly traded Bitcoin mining firm Hive blockchain has ordered 4,000 machines from Canaan, a China-based publicly listed Bitcoin mining hardware manufacturer. Huge, huge, guys. It says here the machines are expected to be shipped to Hive in 2 batches over the next 60 days, 2,000 machines in August and in August and in September. Hive is based in Vancouver, Canada, and has mining facilities in Canada, Sweden, and Iceland. The firm went public in 2017 and is currently listed on the Toronto Stock Exchange, NASDAQ, and Frankfurt Stock Exchange. See what's happening, guys? And they're going public. They're getting listed on stock exchanges. So bullish. And this is why, even though I'm upset about Gary Gensler and Elizabeth Warren, I see the big money moving in the direction of full adoption and just bullish momentum into the setting up of this market, right? So regardless of what these people say, they will eventually have to bend the knee. Check this out. Bitwise launches crypto funds for Aave and Uniswap. The $1 billion assets manager said Wall Street type clients are demanding more exposure to DeFi's biggest names. Case in point, the big money they want in. And eventually, if these regulators don't get on board, they will lose campaign donations, these politicians as well. Now, I interviewed Matt Hogan of Bitwise. They are throwing their hat in the ring for a Bitcoin ETF as well. I'll put a link to that interview. It was from, let's see, I think a few months back, if I'm not mistaken. Just want to make sure I show it here to you guys. So I try to bring you guys these interviews so you hear directly from the people that are building. So here's the interview: the path to a Bitcoin ETF approval in the US. Matt Hogan of Bitwise. I'll put a link in the description for you guys to check it out. He has tons of ETF experience. He ran ETF.com and other ETF companies. So I think they're going to make a bid for it, and we shall see what happens. Now, Binance, like I said in my videos, I think ultimately they will be okay, but they better get in line. And HSBC UK blocks payments to Binance Exchange. The hits keep coming. They better get in line. They better get their licenses, get regulated. We'll see what happens. But this is nothing to be afraid of. I'm just letting you know what's happening, because what did I tell you guys about? The cleanup of the crypto market. That is Tether, which is still ongoing, Bitcoin mining, removing the majority of hash rate in China and spreading it across the globe and moving to clean energy. Also, Binance, the largest crypto exchange, operating in all places without regulation. So they're going after it. And we see BlockFi as well, right? You can't have Goldman Sachs and these big banks here. And you got to put your thinking cap on now. The establishment, they're not going to allow these crypto companies just get away with these things anymore. I'm not saying I agree with it. I'm just letting you know what's happening. If you understand how the incumbents here are, how the legacy system is set up, and they're trying to grab a piece of the pie here. They're looking to take all of it, right? But in the sense of competition, it's easy for someone at Goldman Sachs to go call up somebody at the government and say, hey, what's going on here? We got our licenses. Why doesn't Binance? You guys know how this works. Politics, money, or the political power, Wall Street, the connections, right? We've seen people from Goldman Sachs, Hank Paulson, all these guys go work for the government. They're all in bed together, right? This is not conspiracy theory. These are facts. Just go look it up. They all work together. They're all tied together. And remember, they all got bailouts, right? 2008. So you just got to understand what's happening and know how to plan. So would I keep my funds on Binance.com? I personally wouldn't. I'm not saying you can't ever use Binance again. I'm not saying Binance is bad and or something's wrong. I've interviewed CZ, the CEO and founder, but there's a risk here. So just be careful, right? We don't know what else is down the road. So honestly, you should be keeping your crypto on a hardware wallet anyway. But if you have funds on there, I would move it off into another more secure exchange that has insurance, of course. So guys, what do you think about this Gary Gensler news? I think he came out to save some face here. I think he's trying to continue the same status quo, Jay Clayton 2.0. We shall see what Ripple CEO Brad Garlinghouse has to say tomorrow. Maybe he offers a rebuttal. We shall see, my friends. Things are getting interesting, and I would love to hear what you guys think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I will talk to you all later.